But let's focus on a couple of stocks. Dipan Mehta, Director at Elixir Equities, joins us on the show. Hi, Dipan. What do you make of yesterday's fall? I mean, clearly the markets got a little bit nervous towards the end of it because in the last 90 minutes or so, we saw a lot of selling. How would you approach trade and anything you're looking to buy if we see a further correction?
Good morning, Nigel, and thank you for having me on your show. I think yesterday was just a kind of a correction in a roaring bull market. Nothing to be surprised about. These things do happen, and whenever corrections and falls happen, they usually take out 2-3 days of gains. In a bull market, you tend to get half 1% type of a gain every day, but when there's a correction in a bull market, you can take out 2-3% or even 5% in a single week or so, and which is, I think, perfectly fine. Takes a little bit of steam out of the market, and some of the weaker players they can be exited or they can be flushed out over here, and stocks generally tend to move to stronger hands. Now, whether this particular correction deepens or not, very difficult to say, because on a fundamental basis, nothing really has changed. And actually, nothing had changed also when the Nifty went from 20,000 to 21,500. So it's just liquidity and technical factors which are at play over here.
Okay. Well, of course, this is it was what, a 1 hour, right? 1 hour period where the sell-off, so-called sell-off or pullback happened. So it's too soon to perhaps take any directional call. I get that. So let's talk about individual stocks then. We have a big listing today, Inox India. It got a terrific subscription and it's in a very unique space, this cryogenic solutions. Post-listing, what would your view be on this one?
Yeah, good morning, Sona. No, I think it's better to wait for 2-3 quarters for these companies to evolve, and let's see what their performance has been. And sometimes we discover these companies better after a few months of listing. On listing and a few weeks thereafter, there's a lot of volatility and a lot of heightened volumes, and that doesn't really give the clear picture. Also, many times they have noticed that companies, after getting listed, do not live up to the performance in terms of financials, and there are always certain anchor investors which come in to sell as well. So it's best to just wait and watch. It's an interesting company, no doubt. The space is quite unique and it's a niche player, and these sort of things do appeal to the market. But I would just wait for a few months for the price to settle down and see 1 or 2 quarters and then make a judgment call on the valuation.
Dipan, hi, good morning. You know, just a question, right? I mean, as you said, it's impossible to know if we'll know only in hindsight whether this is slightly more deeper correction or this is a routine pullback after what has been a stupendous rally. But I'm sure that everyone has stocks in their portfolio which are, beyond their wildest dreams or wildest levels, right? Because the momentum and liquidity, as you so aptly put it, has carried them there. And it's kind of hard to justify, but you can't sell because, I mean, you're afraid they'll go up even more. Does this pause in this rally that we've had, should one use to reflect on some of these names and, I mean, decide what to do? I mean, lock in profits. Of course, these are individual names and they'll be different with everyone.
Yeah, good morning, Prashant. I get what you're trying to ask over here is that, what strategy should investors do in a market like this, and where they are stuck with, or they have certain highly priced, highly valued, high P multiple stocks in their portfolio. But having a high P multiple in itself is not a reason to sell. If the underlying business and fundamentals remain pretty decent, then I would not be inclined to sell. For example, in a correction like this, would you sell a Titan or a Trent? I mean, these are really expensive stocks. And when I ask myself, since I own these companies, I would say, no, I'm not going to sell Titan or Trent or even something like a Bajaj Finance. I know they are expensive on a trailing 12-month basis. But if you sell these expensive stocks in a hurry like this, it's very difficult to buy them back. As a strategy, I think investors should focus on whether they want to deploy more money into equities or not. And if they have liquidity, I would rather wait and watch and maybe trim some of the holdings across the board to get into some amount of cash. That is one part. Secondly, within your portfolio also, I think if there are smaller stocks and small cap, mid cap companies which have run the course, then better to sell them and go into large cap. So it's a bit of trying to rebalance from small cap, mid cap to large cap, and just trying to hold on to making any further investments in the market at these levels.
Okay, in fact, I also want your thoughts on Varun Beverages, right? I mean, it was a big mover yesterday on the back of the acquisition that they made. But of course, we know that this is a stock that has had a phenomenal rally. So I'll come to that in a bit. In the meantime, another space that's going to assume.
Okay, all right, Abhishek, thanks a lot for that. Dipan is still with us. Dipan, what do you make of this piece of news?
Yeah, Nigel, I'm very disappointed, and it's not the actual money at play over here. That corpus amount is not that massive, but it's a corporate governance issue. That just because you could not lend more to the lender, you use the vehicle like a AIF, invest in the AIF, and the AIF lends to that particular borrower of the NBFC. This is pure financial engineering, and I don't think the street will look at it in a favorable manner. And actually, kudos to RBI to point out such anomalies and take action against it. I think this may not go down well. It may certainly pass over, but from a corporate governance angle, this is something which will stay in memory of investors, especially long-term investors, that NBFC can take this route to subvert, and make investments in a lender who they would not want to lend directly. So it's more a corporate governance than actual impact on the financials, which also is there, but it's just the way business was done.
Okay, all right. Dipan, have a good day. Thanks for staying by with us. Let's get some 9-10 calls going.